Hello, welcome to WINFX Trading YouTube channel. This is how $5 to $5,000 plus payday V75 and all the V's 100% M1 resultant market direction swing strategy. I'm going to take you to what it is right now. If you are new to this WINFX Trading YouTube channel, make sure you subscribe. Leave your comment of what you are suffering in the financial industry. Make sure you like and share. Turn on the bell notifications so that you will be notified every time we upload money-driven forex content. Please don't be greedy. Take this time and ask yourself, how many people have you changed their life financially? How many people have you put happiness on their face? All you need to do is to share this video to your network. I tell you, they will never forget you. They will thank you with gifts, presents, powerful gifts. Okay, turn on the bell notification also so that you will be notified each time I upload money-driven forex content. So right now, if you have done all this, you are telling YouTube to push this content to a very large audience. And I tell you, this channel is going to grow drastically and more people are going to be happy in their financial freedom. So if you have been doing this and you are doing it right now, I tell you, you are making yourself great. And I promise, if you really do this and you comment that you have been doing these things right here, I'm going to do a special video for you on how to become a boom and crash millionaire trader. Okay, let's go to the main thing, please. I've taken time here. So remember the topic, we are talking about how $5 to $5,000 plus payday V75 and all of these 100% M1 resultant market direction swing strategy. What is resultant market direction? What do you understand by resultant market direction? And what do you understand by swing? This is what you need to ask yourself. You see, I'm in profit already. It's not magic. It is wisdom of over 5 years plus experience in the synthetic market. Let me tell you, you will have to pay attention if you want to be rich right now. You see what happened? Direction. Resultant direction. See, what I'm saying actually doesn't work well for a ranging market. It actually works 100% for a trending market. That is what I mean. You are looking for the resultant overall direction of the market. Look, standing here at this price, and based on what has happened in the past, what do you think is the futuristic resultant direction of the market, of the asset? That's what I mean. Okay, you can see this asset is downtrend. That is the direction. It is downwards. One thing you also need to bear in mind is trend can change direction, but don't be afraid of that. We are actually doing this in a way that even the stop loss we are going to be using will be so small that you will not be afraid of losing. You can't lose. Okay, now we have moving average 20 and 200, but for the determination, for the determinant of the direction, we use moving average 200. Whenever the price action is below the moving average 200, you must believe, this is not assumption, please, you must have belief that the futuristic resultant direction must be downwards. That's the secret. And whenever the price action is significantly above, is not ranging, not cutting, this see, they are just cutting this. You have to stay away from this type of market. It's not everything you trade, man. They're just cutting the moving average 200, that black line. Please, the moving average 200 is the black line. They're just cutting it. No, it's not significant, it's not smooth. But see the real one. You see, yeah, this is real. I seen this. Yeah, the price is perfectly above the moving average 200, and so is uptrend. This one is ranging. In the next video, I will teach you how to trade all these. They will lead you to trading breakouts, trading fake outs, trading a new trend, like trend change. These are traded in market, but that's not what I'm teaching you. I'm teaching you how to trade the trend. Okay, make sure the time frame is M1. Okay, so look at how this works. I'm going to use the live. This is V75. Okay, yeah, I'm there, but I'm sorry, this is V100 but I want to use V75. Later I will come back to this one. I want to use V75 because it is the popularly traded volatility assets. Now listen attentively on how this works. First of all, you have to consider the direction first. Determine the direction of the market. I've told you that we are looking for a resultant direction. So for here, the price is significantly reacting below the moving average. Like the price action is below the moving average. All the candlesticks cannot go beyond the moving average 200, are just below. So we have confirmed down trend. Then what are you waiting for? You are waiting for accumulation, consolidation, and distribution. Please, accumulation, consolidation, and distribution, I want to give you the general meaning of them, but they have a kind of slight different meanings. But I personally, as an experienced trader, I want to converge them to one meaning so that our analysis will be simple. All of them mean a period of indecision and a period of support or resistance. Now, look at what I mean. For that trend, you're actually looking for a resistance, because in a downtrend, you are going to be looking for sell signal, and those sell signal will occur at resistance level. Now see how this works. You see, the price falls down here because all you need is patience, and it goes up here. You cannot just enter immediately here because you'll be afraid. You don't know whether it will keep going up. So what you need to do is to, as the price has swung up to this level, you are going to place an order. Where are you going to place an order? There is no, you can't just place order here because we are not sure if price will come back to this. We are not sure if this price is a swing. You have to wait for the swing to form. You have to wait for the resistance to form. So this is a resistance level, okay, and we are waiting. We are looking at it. The price cannot break it, so it's a resistance level. But if you place order here, it will not be activated. Why? The market is in downtrend. So because the market is trending, look at what you are going to do. Once a price has been rejected from a particular level, that is a resistance level. Let me draw it. This is price. This is it. Because the market is in downtrend, the price cannot be able to react to it again. So what you do here, the only strategy you are going to use here is to draw that zone. Once the price have left the for downtrend, have left the resistance, you draw the line, the area of the zone. Like, see how this work. You notice that it started from here. It was rejected from here. So you draw and cover that, make sure it converges with the resistance level. Now this length, we're going to use this length. You see this length? Measure it. This is how many pips for V75? This is 7,214 pips. Now what are you going to do? The price at which you are going to sell, you are going to divide this into two. Okay, if you divide it into two, it will be around 3,600 plus. Now you are going to measure from the level, resistance level. You are going to measure. Just track 3,000. Yeah, 3,600. No, somewhere here. Yeah, okay. Anything closer can be used. Yeah, you can use here. You see this price 821,178. That is the price you are going to sell here. Then what will be your stop loss? Your stop loss will be at that resistance level, because in a trending market, this is a trending market, the price cannot be able to reach there. It will not be able to reach there. It will take time, and by that time you have made your profits. Okay, so that's where you put your stop loss. Then how do you control your profit? It's very simple. This is actually both scalping and long term. Like, you know, as a scalper, you may not put profit, you just wait. You will be watching, you will be checking the trade continuously. But the best way to put your take profit is you look previous distribution, like where the market distribute before. You see here, it distributes. You look for previous let me call it resistance level in the downtrend. This is it. Okay, you measure the length from that place to another resistance level. This is the length, 9,105 pip. So you are going to measure it. You are going to measure such from the entry price. You enter somewhere here, so you are going to measure about 9,000. Let's say 9,000 plus, and it was hit. So this will be your first TP. The price of 812,608.59. That will be your first TP. And if you check, it was real. And what happened? You see, even it was your first TP was hit. Then your second TP will be the midpoint, like the half of this first TP, somewhere here. It will be hit also. Okay, now if you're a big investor, you know that this market is actually trending downward. You can increase your stop loss level. Instead of putting your stop loss at the resistance, you can that midpoint of the zone, of this zone, you can just project it here up and use it as your stop loss, and then open many positions based on your equity, and allow the trade to run until it forms double bottom or triple bottom, any of them, because that is telling you that trend is about to change. At that level, you can just close. Okay, you can just close. So let's look for buy signal. In buy signal, you are looking for uptrend. Okay, look at it. This is an uptrend market. This market is uptrend. Are you seeing it? Now, because you use the past. You use the past to know where the market is going. If you see the price action has been above the moving average 200, so it's uptrend. Now, what are you waiting for? You are waiting for a zone to exist. We call it many things. I told you distribution, accumulation, and all of that, but I just let me call it resistance or support zone. Okay. The price, this is uptrend, but the price could not continue going up. When it reach this level, it falls down. Now, when it falls here, okay, it gets to this level, it can't break this level. You see, it cannot break this level. Are you seeing it? It cannot break this level. Meaning that it really want to keep going up. Okay? That's the belief. So since it cannot break this level, what do? You really, at times you need to wait for second touch, but it's not a must. If you don't have much capital, you wait for a second touch to avoid trading breakout. Because this might be a downtrend breakout, so but it's not easy like that, because in the past it is uptrend, so we believe it will keep going uptrend, but only that this is a kind of indecision zone, distribution or accumulation. So what you need to do here is you can wait for a second reaction to this, because this is a support already. You can be waiting for a second reaction to this support, which is at this point, because this is M1. It will not take much time. All you need is to have patience. But if you don't have that kind of patience, you can still use only this one. Okay, you need a significant support. A significant support is the one in which the length of the price, like the length of this price from the top of the zone to from one side of the zone to the other side of the zone, the length is so big. That is the significant. And there will be other reactions, there will be other rejections, but those ones are not all that significant. Like, I prefer this one. It's all about patience, I tell you. So what do? You measure the length of the zone, okay, and you get the midpoint. Like, this is 6,571, so the midpoint is 3,300 plus. Okay, that's the midpoint. So what are you going to do here? Because why we are taking the midpoint is to make sure that our price is triggered. Because since this is support, you are looking for price signal, you are going to measure from here. Measure 3,000 plus pips. Okay, this is it. We are going to place a buy order at this price, 778,792. And when you place that order, your stop loss is going to be on the support level. But please, if I have been saying it should be on the resistance support level, please, it's very risky then, because a support or resistance level price there is high probability of price coming back to that level many times. So it means the stop loss will be triggered and you will be cut off. So the best thing is you use some pip away from the support or resistance as your stop loss, or that midpoint. This midpoint, instance here, 3,000 plus, you are going to project it from this support. I think if you see here, this is 1,300, so these prices will not trigger us. So you have to add it to this price, this black price, 775,429. You are going to add $3,000 plus there, and whatever I give you will be your stop loss. And believe me, the price can never reach there. What happened? You see, you have made all these pips from here. You have made almost over 20,000 pips. And how do you place your TP? Normal. What we did in the previous, you do the opposite. You see, this is look at the previous, like the previous swing, like the previous, after a support. This is the support. Measure the length of the previous buy signal. After the market hit the support, you hit support. So look at it. We are going to be measuring the least swing, the first, like in the zone. This is a zone of consolidation or distribution. Let me try it. This is a zone. You see this zone? This is a zone where the price cannot break up again. It's trying to change direction here. So what you need to do is you look for the minimum inside that zone. Please let me try it well. Inside this zone, you see, inside this zone, you look for the least swing point, which is this one here. Okay, so this is the least swing point. So this price will be your first TP, 789,128. The way you are going to measure it from the support. This is a support. You see, it's about 20,000 pip plus. You are going to divide this 20,000 pip plus to get 10,000 pip plus, and then you are going to use it to form your next TP. How do you do that? Look at what I mean. I'm sorry, let me get this too. So look at what I mean here. Look at what I mean. When you buy here, you place your first TP around 780 plus, somewhere here. Okay, isn't it? Somewhere here. Am I right? It was around 10. I'm sorry, wait, please wait. I'm going to take you to, because we are using the length, these pips of the previous buy signal. Okay, it was around 20,000. So you have to use your, you can go to higher time frame and get the price. Or what you need to do is, since it is 20,000 pip, you check this price, your entry price, you add that 20,000 pip to it. That is it. So that will project it. You just put it as your TP. Then your second TP will be the midpoint of 20,000 pip, which is 10,000 pip. Then you add 10,000 pip to this price, this black price. Okay, when you do that, it will be somewhere here. So you see, all of them will be triggered. Okay, if you want to get other TPs, you will be using this midpoint theory. Keep dividing. Like, if you want to get the third TP, for instance, since your second TP is here and your entry price, because it will depend on your entry price. Your entry price is here and your second TP is, your entry price is here and your second TP is here. Are you getting what I'm saying? Your entry price is here and your second TP is there. So your third TP will be the midpoint between your entry price and this TP price, maybe somewhere here. All of these will pay you. You see, that's the secret of this signal. Let me show you what happened here. This video is taking time, but I'll make it fast. In this place, okay, this is a downtrend. Okay, actually I traded breakout, please. I can't use this as an example, so that breakout trading will be in the next video. But later I will post a video about profit made with this approach. Thank you and remain successful. Stay tuned to WINFX Trading. Try to join our binary option trading challenge where you can turn $1 to $400 in a day. All you need to do is to subscribe to VIP group. Chat me on my Telegram. I will give you details of how to join and the video you need to watch so that you know what you are going to be doing. Thank you and remember